where the tech stocks are possibly overvalued. But there's no place in a lot of the market for the tech stocks, the stocks to go. There's a lot of capital out there looking for a home because it's moving out of the oil sector because unfortunately we've just had terrible results in the oil. So these funds are having to place money somewhere, and where they're placing it is tech. So yes, I do believe that a lot of the tech companies are overvalued, but that doesn't necessarily mean you can't make money on them. I know that sounds strange to you, but but I do think tech is the place to be because it is here's the thing about the stock market. The stock market doesn't look at current earnings. It looks at earnings in the future, typically 6 months from now. So I think earnings for companies like Microsoft and Apple are likely to be very good, especially for Apple. Why? Because Apple is going to introduce the new 5G iPhone, and that's going to be introduced probably about September 21st or 22nd. They haven't actually announced the date. And I believe that a lot of people will want this because I certainly want it. I don't want to part with the $1,000 that it's going to cost, but I will probably want it. And the reason I want it is because it'll be able to do a lot more than it'll be able to monitor your health and a lot of really cool things that I think are going to be very valuable in the market. Now, will this carry the market higher? Who knows? But I do think that it will carry some of the industries higher. The reason they don't have 5G now is because the networks aren't ready. They've been building out the networks, and I believe that they're not ready to go, unfortunately, but they will be ready to go September in the September timeframe. So that's when you want to look at this market. That's one of the reasons why Apple is trading the way it is. I mean, I think Apple is going to trade up probably at least to 310 in terms of its price. So it's true. I mean, it's probably one of the most valuable companies in the world. And it's valuable for a reason. Everybody, even in this COVID-19 thing, is using their iPhones to communicate. I use mine. As a matter of fact, I broadcast to Twitter. I broadcast to TikTok on the iPhone. So it's totally created a whole lot of stuff, as everybody knows. But the 5G it probably will go to another level. So that's the reason why, even though Apple may be overvalued, you might want to look at a way to participate in that. Now, are you going to be able to buy the individual shares? No, you have to have 20, 30,000 to do it. But you can buy you can buy technology ETFs, or you can buy the Qs. I think the Qs is the way to go, the QQQ. And you don't have to buy but 2 or 3 shares. It's better to buy quality than to buy stocks under $10. So if you only have, let's say, $500 to invest and you want to invest it for a relatively short period of time, a long time, then, buy a few shares of Apple and see what happens. And if it goes up, sell them. But I think, that's the way to go. That's the way to invest in this market. So yes, tech is overvalued, but I still think it's a good place to put your money. So that's the thing. A new high, over a month. People are getting their losses back. Yeah, they are actually. Now, here's the thing. I wish that some of the people have been watching me. Now, I don't say that for vanity reasons, but I basically, at the end of February, told everyone to go to all cash. I mean, you can look at my posts on TikTok. I was saying basically get in cash. See, that's what I did. And some of the people did it and they did well. The market went down and then I shorted the market, and then now it's just coming back up. I'm coming back in, but I didn't suffer any of the losses. This is the main thing in stock investing. It's not how much money you make, it's how you can protect your capital. So I just want to be really, really clear on that. You protect your capital basically by using these things called stop losses. And if you're going long on the stock, that means owning the stock. You typically want to have that set at 7 to 8% less than you buy it. So if I bought a stock for $100, I want to set that stop loss at $92 to $93 a share. So if it crosses that point, it sells me out. Now it can be heartbreaking, but it's a better way to go than losing your money. Now most people just took it in the shorts, but then when the market comes back, then you want to move back in. and you don't destroy your capital. That's the main thing. Don't destroy your capital, and then I can show you ways to make money on the movement of capital. But one of the things is you must protect your capital at all times, and that's why you have stop losses. So just wanted to say that. See, don't some of the brokerages sell to crash stop losses? Well, that's they do. I mean, sometimes they do. Sometimes there is movement down. The thing you really have to watch out for is what they call snapback rallies from what they call the shorts being unwound. Now, what do I mean by that? In the earlier part of this year, I made some money in Tesla by going long on Tesla when 20% of the people were short on Tesla. And when that happens, if the stock goes up too much, the short positions then have to be unwound, meaning that they have to be sold, and they're sold by the brokerages. This causes stocks to move up very, very rapidly. This is what they call a blow-off top. Well, for me, a blow-off top is a great thing because I just keep moving up my stop loss, and then as I'm long, then when the stock reverses and comes down, I'm sold out. In my instance, I was buying Tesla into the blow-off top, and I was setting my stop losses up each time. So I was able to sell out at 900 and 825 and 800. So I did quite well. A lot of other people were very disappointed. But so that's why you never trust you to basically get in to the market. You always want to set the stop losses, even on the way up, because you want to protect your profits, especially if you're moving up and you move above 20% where you've paid for that stock. Then you want to make sure that you protect that. You want to protect that stock. So that's just a way to do it with stop losses. All right. Hey Jim, can you consider a V-shaped pattern conditions as a U cup in current conditions? No, not really. Now here's the thing. I don't think so. And why don't I think so? I don't think we had a real and I'm moving over to the spider here up on the screen. Now I should be on Periscope and YouTube now. I was trying to broadcast also on Facebook and I fucked it up with the technical, so I apologize for that. But if you'll notice on the spider, and I just wanted to show you that, you do sort of have a U-shaped, it is sort of U-shaped, okay, and then it comes up. But I believe that we are going to see, at least in this market, we're going to see it come up to about here, and then it's probably going to reverse down, I believe. So the pattern, I don't believe, is a cup and handle. I think it's going to be a double bottom. It's going to be kind of a W pattern. That's what I think is going to happen. But I don't think that'll happen until the spider reaches about the 309 level. And how do I get that? Well, as you can see, it moved to this. This is where it tested. Okay, it went. This is when the market went down. It then boom, it tested there. That was the support at about 290, and then boom, it went up, and then it tested that it tested that resistance there. That's resistance. And then so now when it went all the way down to 218, it's moving back up, and it won't hit resistance until it hits about that 308, 310 level. So that's kind of what I wanted to show you there. That's why I think that the market is going to move higher, at least temporarily, because this 50-day moving average, you see, it tried to move through the 50-day moving average. It failed. It went back down, and then it moved again decisively through the 50-day moving average. That means it has upward momentum. The stock market has upward momentum, at least until it's going to hit resistance. And I believe that resistance is going to be at about 308 to 310 on the spider. Now, I've revised that because earlier, if you've been watching me, I was saying that it was at 275. And how did I get that? Well, that was right here, you see. But it busted through that 50-day moving average, and it went higher. So there you go. I underestimated the power of the snapback and also the power of the stimulus to change that direction. So there you go. What is your opinion on JP Morgan? JPM is currently at 95. It will. Well, here's the thing about JP Morgan. JP Morgan is a class company when it comes to when it comes to the financials. It is, it's really in a kind of a class. It's in kind of a class by itself. But here's the thing about it. It's currently at 95. I don't particularly like this sector only because I think that the financials are going to get hurt somewhat by the change that's happening in the real estate, especially the commercial real estate in the retail area. A lot of retailers are not going to pay their rents, and this is going to be very hard on the financial firms. Even though JP Morgan doesn't have tremendous exposure to this area, it is a financial company, and I do think that the consumer is going to have issues. I don't particularly want to be in the financial sector right now with interest rates being super low. So you can't hardly make any money on that. The average people that have credit cards are super burdened with them, and we don't have cash. So that doesn't bode well, I think, for the financial sector. But if you're going to be in the financial sector, an easier way to do it, it's going to be a stock group. I wouldn't go into the sector spider, the XLF, which covers the whole thing. I would go into the quality. If I was going to be in the financial sector at all, which I am not, I would be in the quality names, and JP Morgan is the quality of quality names in terms of the banks, in terms of the money center banks. So anyways, how should I get into Amazon when it's cheap? Well, this is not the way to think about it. I know this is how we think about it. In retail, we think, wow, that's a good deal. It's something's on special. You go down to my Kroger, I go down to the market and think, wow, those apples are on on special. That's a great deal. That doesn't really work in the stock market all that well, because typically when you buy stocks that are cheap, like for instance, right now, everybody says, oh, Boeing, it's so cheap. That's a good stock to buy. No, it isn't. It's terrible because they're probably going to go lower. So you don't necessarily want to buy cheap stocks. Now, here I am on my soapbox about cheap stocks. Well, Amazon is not a cheap stock. Amazon is not a cheap stock. Amazon is part of the new economy. And the problem with Amazon is the shares are so darn expensive. You can only buy a few shares. Now, if you have $5,000 to invest, 2 shares might not be a bad play in Amazon, because Amazon, is going to be king in this new world. But a better way to play it probably would be to buy the QQQ or something like it that has that in it. So that's how I look at it. But Amazon is now another way you can play it. You can play it with options. The problem with options in especially the hotter stocks is that it doesn't really pay to be a buyer of them. It's much more profitable to be a seller of them, and really to be safe, you got to cover that. That's what I do most of the time to make money. I look at the stocks where the options I believe are overvalued, and then I buy that stock and I sell the option, and then collect the premium as there's the decay, what they call the theta, on the stock, on the option. So in a long story short, that's kind of where I am. Do you use a market profile for day trading? I always do. If I'm day trading, and I'm not really what they call a day trader, though I do day trade. Okay, just to tell you full disclosure, I look at the market direction. I never try to trade against the market. Now, this is very important because typically, if you trade with the market, you have a much higher rate of success. So I'm always looking at direction. And how do I get direction? Well, one of the main indicators for me on market direction is how the SPDR is doing. Why? Because the SPDR is the largest ETF in the world. It's worth about $220 billion, and it tracks the S&P 500. That's really the Fortune 500 companies. Those are the very best companies typically. So if the market is looking but it doesn't necessarily concentrate in technology like the Qs do, the QQQ, or in the industrials like the Dow Jones, or there's another ETF called the Diamond. It's a DIA. It's a symbol on it, and that is the Dow Jones 30. But there's only 30 stocks in the Dow Jones, so I'm not as interested in that one as to overall market direction. Basically, I took at two main things to calculate market direction. First of all, I look at how the Qs are trading, the QQQ. That's the NASDAQ 100. Those are the top 100 companies that are listed on the NASDAQ. Also, I look at this spider, which is the S&P 500. Those are the ones I really look at. And then I look at the overall market trend. And where I get that typically is every morning. I get that from the IBD. They crunch the numbers overnight, and it's very helpful because that way I'm not caught out in a market that is trending against me, even though I may not realize that. And that's the thing in this market right now, is that it's it is trending up, but I would have normally, if I would just do it on feel, if I just flew by the seat of my pants, which I don't do anymore because I've lost a lot of money doing that, I would say, well, the market's in the downturn. We've got all these horrible things that are going to happen. People don't have money and all this stuff, and that's how I would have traded it. But I realized that I'm a lot of times wrong. My sentiment might not be the real sentiment. So I go out and I look at these other things to help me with that direction. So I never try to trade against the market. And here's the thing: if the market is in the uptrend, I'm willing to invest. Okay. If we're in a bear market, though, and we were in a bear market, I really still think we're sort of in a hidden bear market, but not right now. I mean, not in the interim. Then I go to cash and I go short. When the market is trending upwards, I typically am long, and I'm long right now. I'm long Tesla. I'm long into earnings, which is not necessarily the best move all the time, but I have done very successfully. I've hedged that by selling a call. Normally, I won't go naked into earnings with something like Tesla, but I will hedge that position with a call, and that's what I've done in this case. So, long story short is always move in the trend of the market. If the market is moving upwards and it is a upward trending market, then you want to be long. You want to typically take long positions. That means that in a bear market, though, you want to be in cash, and you want to be potentially short the market. Basically, what I'm talking about by being short is that you're borrowing the stock, you're selling it, and then you're waiting for it to go down. That's being short in the market. But right now, we're not technically in a bear market. Now, what is a bear market? A bear market is where you have a correction of more than 20%. Now, when we had the market correction on the 23rd, the lowest on the 23rd, we were down about 35%. Currently, we are almost back to the levels that we had prior to March 23rd. So we're not technically in a bear market. We are in a upward trend. We're in an uptrending market. So therefore, you want to be long. Anyways, a lot of discussion there. I hope to see. I'd up to see a push-up tomorrow. We get past. Okay, yeah, I hope so too. We'll see. I mean, tomorrow is going to be a very critical earnings day. As I say, there's going to be a lot of people that are going to report tomorrow, and that's going to be a big deal. Now, I kind of wanted to show you coming into these earnings again, and I discussed this a little bit earlier in the price show about buy points that we want to look at. As you can see, the NASDAQ 100 is off a little bit today, coming into earnings season, but I do suspect it's holding the line here, and it's holding this 50-day moving average line, and we're moving above it, which is excellent. Now, there are four stocks that I kind of want to highlight that I do believe are going to go higher, and they might want to be. You might want to watch list them for your list. The first one, and this is one of my all-time favorites, is PayPal. Why? Because a lot of people invested in Visa and MasterCard, and those are great companies, but PayPal is the future. PayPal has more users than you can shake a stick at. And the thing about it is that PayPal is the bank for the unbanked. It really is. people talk about, oh, all these unbanked people. Visa and MasterCard, they work through regular banks. But PayPal, on the other hand, all you have to have is a smartphone. And you can have an account. You can transfer money all over the world. So it's an amazing company. Yes, there's a lot of companies that are trying to catch up with them, but I think PayPal is still the leader, and I think it's the one you want to potentially own, and at least in the near future. And you see it's moved up very, very confidently above the 50-day moving average. It has a buy point of 124.55. So technically, I wouldn't be in this one if I was totally went on the technicals. I wouldn't be in this on until 124.55. Now, with Tesla, with PayPal, I would buy it probably a little bit before that. Why? Because it's sort of like, you know how it is. When PayPal hits 124.55, the stock will move significantly higher because everybody knows, at least in the investment community, what these levels are. So I would potentially look to possibly coming into the stock, maybe at the end of the week if it's right below the 124, and I would definitely be in it if it was above 124.55. The next stock, this is a stock that I bought this morning, is Tesla, and it is forming a. This is a very, very volatile stock, so this is a hard one to trade, but it was down a little bit in the morning. Now, normally I don't buy them when they're coming down. I don't. But Tesla's earnings are coming out tomorrow. I suspect that they will meet expectations. I'm hoping they will, and if they don't, well, I'm going to be sorry. But if they meet expectations, then I suspect it will hold the 775 level and possibly go higher. I believe that there's a major pivot on this stock basically at 775, which is where the buy point is. If it goes above that tomorrow and it holds that, it's probably going to go into the 800 level. So that's one that you might want to look at. Buy point on Tesla, 775.05. And again, they're having your earnings tomorrow, so you may not want to buy it today unless you're hedged, like I am with a call. But tomorrow after the earnings bell, this is when you might want to look at this because I do believe they're going to go higher. Also, Atlassian, I've covered this one before. They're very, very close to a major buy point, 149.80. This is a quality stock. Again, the composite rating on this is 99. It doesn't get any better than that, by the way, folks. Its volume is down a little bit today, so even though it's retreated from this price, because there's lower volume here, this indicates that there's not as much conviction on the downside for this. If you see it go down 2% and with up volume, in terms of up volume, then you want to be careful because it's probably changing direction and going lower. But this is not in that camp because the volume doesn't show that. Anyways, that's another one that you might want to look at. Microsoft, of course. Microsoft is my absolute favorite long-term stock. I'll just be up there. They have this thing called Microsoft Teams, which is going to take over, not totally from Zoom, I think, because it looks like Zoom may be a candidate for takeover by everybody's favorite Larry Ellison at Oracle is looking to buy a video conferencing platform, and I think that he may be buying Zoom. So Zoom went way up, and then it snapped back. There was a short cover on it, and I was able to sell a call, which is nice because on the short cover, when you sell a call, you make money. Now, here's the thing: most people will buy and sell options. I particularly don't like to buy options. I'm a seller of options typically. Why? Because studies have proven that 70% of the time, if you sell options, you're going to make money. You're going to make money. Whereas if you buy them, 30% of the time, you're going to make money, and you're going to lose 70%. So I like to stack the odds in my favor, and I typically like to be a seller of options and not a buyer of options. So that's just my take on it. But that's served me very, very well, by the way. Okay, let's see. If the market tests on the bottom again, won't Tesla get slammed? Yes, I think it will. But I don't think it's. But in the short term, I don't believe Tesla. In the short term, I think we're in an uptrend. Now, that's why the option that I sold on this is only good until Friday. After Friday, I'm probably a seller once again of Tesla, because that's what I do when the uptrend happens. I will typically buy Tesla, and then I will sell an option, and then wait for the option to expire, and then either sell the stock, or if it's called out, just it's called out. So that's how I usually play it. But you're right, it will get slammed again. But I don't believe it's going to go down initially until it gets to the levels that I think it will. Let's see. Okay. Are you not into biotech companies right now? It's not that I'm not into biotech companies. I like biotech companies. But here's the problem with biotech companies. Biotech companies tend to be very thinly capitalized. I mean, not thinly capitalized, excuse me. Tend to not have very good revenue. And what happens is that they'll create a drug, and then it'll get approved by the FDA, and then if all goes well, they'll be purchased by a bigger company like a Merck or a Johnson & Johnson, something like that. And that's really when the payday happens. So that's one of the reasons I'm not a big fan of biotech companies, because I do think so much depends on the FDA approval, and there's just and the market conditions. So that's one of the reasons I'm a little bit leery in that space. That said, there's, I think, great ways to play the biotech market, and that's by buying the bigger pharmas, because they're really the customer for those kind of companies. And of course, my favorite right now is Bristol Myers Squibb, BMY, and I have, just for lack of full disclosure, I have, this is down a little bit today. Its high was 68. It's trading at about 62, but it turns relatively thin range. It's almost a perfect bounce from the low. So that's one of the reasons why I am not a big proponent of buying biotechs, because they tend to be more speculative. They tend to be more speculative than other stocks. So that's why. What about Ford earnings today? Yeah, this is really going to be the tell. Ford, as you know, has been having a lot of difficulty regarding its regarding its earnings. It was the only one of the major of the major automobile companies not to declare bankruptcy. Now it's trading for about $539 right now. There's almost no equity there left. This is I don't think it's going to go out of business, because I think the Ford family would buy it back. But I think that Ford, here's the thing. Ford is fundamentally a good company, okay? But they're going to have to downsize tremendously. Now, you can make money on Ford, and Ford kind of goes against my normal thing of not buying a stock under $10. Ford is kind of different, because they actually have production, they actually have sales, and it's a question of just adjusting to the market. You could possibly double your money in Ford if it moves from about 4 to about 8, but it's much more of a crapshoot. So if you want to make some quick money, that might be the way to play it. I think that buying before earnings on Ford might be the way to go. Now, I think this one might be a way to play this on options. I would look to buy a call, and here again I'm saying I'm looking to buy a call, but there's a May 1 call available. There's a 5.5. Here's how I would play Ford. There is a there's a $5 call available on Ford for 52 cents. If you were to buy several contracts and it were to go to $5.50, you would do very well on that play. That might be the play. I wouldn't buy the underlying stock, but I would consider possibly buying the call. I would think it's a relatively low risk thing, but I wouldn't buy the May 1st call. I would look to the May 20th call. It's a little bit more expensive, but it's moved up decisively. The one I would look at would be the May 20th 550 for 33 cents. I think you could do very well on that play, by the way, and you could buy some size. And this might be a very interesting play on Ford. So that's where I'd look to do it. Tyson's Food is a good bet. I don't think Tyson's Food is a good bet because they're having trouble with keeping their plants open. So I think very carefully about buying Tyson. Just my words. It doesn't necessarily have anything to do with it. I would be very careful about Tyson. They do have some issues in the supply chain, and even though there's a lot of demand for their product, they have great bacon and pork products. I've eaten their stuff. I just don't think the problem is with their facilities. So I'd be a little bit careful on Tyson. What do you think about Netflix? Netflix is probably the best. In the last 3 years, Netflix has returned more money to more people than just any other stock, and it is a tremendous play in terms of it's a tremendous play on stock. I can't say anything bad about it. I just think that you're going to continue to grow. That is basically television has become Roku, Netflix, YouTube, and a few other people. ABC, NBC, CBS, they're done. They're done. It's not their time anymore. And everybody's out of joint because they've got these fancy jobs as reporters, and they're going to be out of work probably, in 5 years. So, I think Netflix, even at the price level, is very high. I think it's good. It's going to be, and it's going to get better. Netflix is probably going to get even better than it is now. So I'm very high on Netflix. Thanks for your videos. Thank you, man. Thanks for watching them. I so appreciate anybody that's watching me here. Oh, and I have actually some comments. Wow, I've got a comment. This is so exciting. I've got 4 of these. Wow. Okay. All right. Okay. Well, let's put it up there. I'm going to show it. Oh, there we go. Thank you. Thank you, Market Trader. I so appreciate it. I'm now back on Periscope. Periscope works better than any of the other platforms. I just have to say, it's just better done. It's just better. And cash is king. If tech falls, all the money goes out of the market quick. Absolutely true. This is why, if you're going to be in tech right now, please set your stop losses. Please, 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 please do this. Set it at 7% from where you buy them at the minimum. If they're going up, you want to move those stop losses up, because this is the tech rally is based on, it's a house of cards. It really is. That's not saying you can't make money in it, because you can. But it's a house of cards, and Market Trader, you're so correct on this. You don't know how correct you are on this. Cash is king. I'm typically going in and out of the market. I'm making relatively short-term trades. So, I'm probably, thank you for you, everybody out there putting Ford up there. I may make an options trade on Ford this afternoon, because that looks kind of tasty to me. Because normally I wouldn't do it, but it looks kind of tasty. I'm going to do some more research before I place it. But you're right. You're right. I mean, it's really good thing to go. Again, thanks to everybody. I so appreciate everybody tuning in and watching me here. I'm going to put up my little banner here, and that is, let's see. It was on Facebook, but I didn't quite do that. And I'm going to show you this. Basically, on YouTube, it should be www.youtube.com Dallas Trading Floor. I think that there's a C in there, so I don't think that is totally correct, but I'm going to check it out today to make sure that I'm doing it correctly. One thing I do know is that Periscope has come through again, and Periscope, pscp.tv/Dallas Trading Floor. And that works and that works every time. And I should be broadcasting on that, and I will not. I will take it off of Twitter, at least for right now, and I will put it back on YouTube. I have a limit in terms of the number I can live stream on. I can only do it on 2, and then of course on TikTok. Your opinion of real estate, gold and silver, and crypto. Okay. Gold and silver. I think that the midterm trends for gold are looking fairly decent. Now, you're going to make a lot of money doing gold and silver? No, it's a hedge trade. So I like gold and silver right now, and especially like I especially like 2 of the gold mining stocks, and that's KL and FNV, Franklin Nevada Gold. In terms of the physical gold, not as much. There are some gold ETFs that you might want to consider, but I like the gold miners the best. Now, in terms of crypto, everybody's interested in crypto. You know, you want to be only in the quality crypto thing. I think Bitcoin basically only because it has the most liquid and the widest market. I am not a terrific bull on crypto. I do think though, going forward, crypto is going to be much bigger than it is now, and I don't think the trends lie, because I'm a trend guy. So I do think it's going to be much bigger in the future. But be careful, even though it's very tempting to go to some of the minor crypto products, I wouldn't do it. I would stay with just the absolute rock solid, most traded crypto, and that's of course Bitcoin. So that's where I am on there. Now, real estate. Real estate, if you're in any of the real estate ETFs, get out now. Real estate is not the place to be, at least in terms of the commercial real estate. Why do I say that? Because the world is changing. With this coronavirus thing, we've all been working from home. I'm working from home right now. As a matter of fact, believe it or not, I'm working from home. And the thing about that is I don't necessarily need my office anymore. Now, I have my office. I've been paying rent on it. Nobody's there, but I don't really need it. I could actually run my whole life from here, which is sort of amazing. This is not a good sign for commercial real estate people, because a lot of people are going to be thinking the same thing. They're going, wow, why should I go into the office every day, crush into the office, and then be around people I might get a disease from and pay higher rent? That doesn't make sense. Why not just get a spare bedroom and work from there? And I think that a lot of people are going to do that. So commercial real estate in general is not going to do very well. Now, does that mean that all real estate is going to do bad? No. There are some parts of the real estate market I think that are doing very well. Now, one of the areas that I'm very interested in is the mobile home park market. And he said, there really is a mobile home market? Well, there is. And there's a company that has an ETF that tracks this. As a matter of fact, they invest in some of the largest mobile home parks in the country. And it's run by Sam Zell, and the name of it is called Equity Lifestyle. The symbol on it is ELF. I just want to see how they're doing today. Yeah, and they're up today. No surprise. Oh, no, I'm sorry. That's wrong. It's ELS. I'm sorry. ELS. Here we go. Yeah, Equity Lifestyle Properties. Okay, yes, they're up $1 today. This is a quality company that's in the real estate space that you might want to look at. It's like, wow, I can't buy any company pure play that owns real estate parks. Well, I mean that owns mobile home parks. But you can buy this ETF. It's called Equity Lifestyle. It's run by Sam Zell, and it's up today. And if you want to play real estate, this is where you want to be. Why? Because mobile homes have no competition. They're the most affordable real estate that you can get. And with apartments going up so much in price, this offers a very nice lifestyle for under $1,000 a month. But the thing is, they're not building any more of them. So this has got a tremendous moat. That's what Warren Buffett would say, a moat. So there's not going to be a lot of competition. So these people have the ability to basically just have really nice cash flow. And people aren't going to, if you're living in a mobile home park, you're going to pay the rent, because where else can you go, right? You're homeless if you don't. So that is one area that I think is really good. And by the way, the stimulus checks and all the unemployment, if you live in a mobile home, in a mobile home park, that actually makes sense. If you don't, and you're in a place like Los Angeles, guess what? You're on the streets because the average rent in a place like Los Angeles is over $2,000 a month for one bedroom apartment. Can you believe that? It's a lot high. It's so high. So all you have to do is mess up once, and you're on the street. Whereas if you're in a mobile home park, you're under $1,000 a month, and even if you just get government assistance, you can live there, and you can live fairly well there. So that's why I like ELS. What's the symbol on that one? Hey, Bobby, the symbol on ELS is ELS, Equity Lifestyle, and it's run by Sam Zell. It's not a terrifically exciting stock, but it does very, very well in an environment like this where there's a lot of uncertainty. Okay, and there definitely is a lot of uncertainty in the market right now. It hit a high back in February of 77. It's currently trading at about 64, so it has about 10 points to go up. This is not a terrifically exciting, this isn't a terrifically exciting play, but I think it's a very stable cash flow. And if you're looking for cash flow, this is the one you might want to take a look at. Give me the singles. Okay. Well, why do I think that this would be a good sector? Well, the reason I think this is going to be a good sector is because, unfortunately, coming up in May is going to start the beginning of what I could solve the cash crunch. Most people in this country, unfortunately, only have 2 weeks of income that allows them to live. So paying rent and this and for everything else is very difficult. They don't have a savings, and they can't really get savings because they don't make enough money and the rents are too high. And most people live in that situation. By the way, anybody out there, here's what I did years ago. It changed my life. Buy a duplex, because you'll essentially have a synthetic paid off house. And that's what I have. Now, so when there's a cash crunch, people are not going to be able to make their rents. So that these big companies that invest in apartment complexes, they're going to have a lot of trouble making their numbers. And yesterday, I put on a list of companies that I think are going to be very, very weak financially and are potentially short candidates. And one of them owns a lot of commercial real estate, basically multifamily housing that's relatively new, and of course has a low cap rate because they pay too much for it. So these stocks are going to do poorly. So this is where you got to be very careful in the real estate if you're investing in the real estate sector using an ETF. But there are some alternatives, and the one that I like, of course, and I'm repeating this again and again, is ELS, Equity Lifestyle, because they're invested in a sector of the real estate market that I think is going to have strong cash flows regardless. I mean, we could have a depression and we're still going to pay because people have to have a place to live. And this is the least expensive place to live in the United States are in trailer parks. And many of the best trailer parks are in Florida and Arizona. And they have residents that never leave. They move in and they never leave. The only way they leave, unfortunately, and this is kind of sick thing to say, is they leave in a pine box because they never leave because you can't get a better deal. So, and these people are, a lot of them are in retirement, but you won't see a drop in the cash flow. A lot of people that thought that they had it made investing in things like General Growth Properties and Simon Properties and companies that own shopping centers have learned the hard lesson that, hey, these fancy retail places, they don't have enough. They don't have enough people, so they aren't really as good as we have in the country in mobile home parks. So that's the only real one that I know of in mobile home parks. So let's see, Sam. Okay, I have a question. Wow, from YouTube. Excellent. SRG. Okay, Sam. Hey, how's New York? I hope you guys are doing good there. I haven't talked to you in a while, and really thank you for coming on and taking a look at me. SRG. Let me just let a quick quote on SRG. Ooh, okay. Well, it looks like it's recovered a little bit. Heritage Growth Properties. No, I just don't think this one. Wow. are we going to look for a bounce here? Yeah, I wouldn't be in this one. I wouldn't be in this one. I just don't think you want to be in the growth property area right now. The reason again is because of the problem with cash flow on most of these properties. They just don't have it, unfortunately. They really don't, and that's a major issue. If you're looking for cash flow in the real estate area and you want to be in a REIT, look at Equity Lifestyle, really, because I don't think you're going to lose money on that one. And that's just my my humble opinion there. Okay, so let's see. User 30. Are you? Are you 100? Okay, user 30. Are you 100? Okay. Okay. Well, let's see. What do I have here? What do I have going on? Oh, okay. Let's see. I've got. All right. User name. Excellent. Ahmed. Hey, thanks. Unfortunately, I do not read Arabic, or Farsi, and I don't speak Farsi either, but thank you for taking a look. How would POP and other government loans affect the stock market? Okay, the PPP loan is basically going to. Here's the thing about the PPP loan. A lot of the people are not going to, are not going to. What they're going to do is they're going to temporarily hold up the prices of what I consider certain industries. For instance, the hospitality industry. For a short period of time, but then I think that they're gonna succumb. So basically, it's just all it does is it puts a stop on the fall in the price of a lot of these stocks. So that's really what the PPP is doing. It's not to support the stock market, even though I think some of it will find its way into the stock market. It's really to prevent the deflation that a wage cut like this, where people aren't able to get out, is created. Just so everyone will know, we're experiencing a temporarily deflationary drop in the economy. And why do I say that? Well, all of a sudden, in the month of April, 70% of the demand is going away. Now, 70% of our economy is in consumer demand. So all of a sudden that goes away. Not all of it, but a lot of it does. And so people aren't spending any money. Well, many of the businesses in the hospitality area, restaurants and these kind of things, they only can survive for about 2 to 3 weeks in terms of cash flow with no customers. So a lot of those people are going to die. That's where the PPP loan is for. Now, are they going to get the money to the people in time? Probably not. So a lot of them are going to die anyways. But when we have these deflationary shocks, as you can see, that's why one of the reasons why the price of oil is just going diving, because nobody's out there demanding oil. So therefore, the supply just basically is overwhelming the demand. And that's what you call deflation. In deflation, the value of cash goes up and the value of commodities, well, unfortunately, goes down. And that's what we've got happening right now. So will that turn around? Probably, because they've flooded the markets with all this cash. And eventually, at the tail end of this, we should see some inflation. This is why people are starting to move into the gold and the silver area, and especially into the gold and silver stocks. So that's what's happening right now. Let's see. Hi, Jim. Special spuds. I'm not sure. Jim Holders sell. Hey, thank man. Hey, man. Hi. Can you? Okay. Special. What? SPHDs? What is SPHDs? I don't know what that is. I apologize. I don't know what that is. I don't know what the SPHD is. So I'm going to have to pass on that one. Well, I have wasted a perfectly good hour. That's what they used to say on Car Talk, which is one of my favorite shows. Unfortunately, they died. I've wasted a perfectly good hour of your time, but I thank you so much for tuning in to my YouTube channel and sometime Periscope channel, which I'm going to get better on. And thank you everyone for taking a look today. I'm going to be on tomorrow, hopefully with some plays, maybe some option plays that I'm going to work on today for earnings, because I think that there's a lot of opportunity to make money when earnings are being announced, and there's a lot of good plays like straddles and stuff like that. And hopefully I'm going to go over that tomorrow with you. Again, if you want to get my alerts, which I haven't sent out any of you yet, so I can understand if you're a little bit frustrated because I'm a one-man band, go to Dallas Trading Floor and enter the stuff in the comment section. Get on our mailing list. You know, nothing to buy, nothing to do, anything like that. I just want to send you out some trade ideas that might help hopefully make you some money in this market. So again, thank you so very much. And I think I have a few more things. Make us rich, yes, please. Well, isn't that everybody wants to be rich, and I totally understand it. That's why I got into stocks in the beginning, because I want to be rich. So I agree with you. BA puts, yeah, okay. You know what? Hey, baby, that might be the way to play this earnings. Very, very good. Very, very good. Thank you for bringing that up. Well, let's look at the puts. Wow. Okay. Wow. Some of those puts are expensive. Okay. If you want to play it, it looks like there's a May 1. Now this is a really a binary. So there's a May 130 that you can buy. You can buy this put for 580, and this might be a good play here, because if this bad boy moves lower, if it moves lower, you can make that's $5 of cash that you can make on this one. That's not a bad play. That's not a bad play. I'm definitely going to see if I can come up with some potential directional plays on Boeing. Thank you for that. Thank you for that. That's why I so appreciate everybody here doing the show, because sort of like a mastermind thing, you guys come up with great ideas that I didn't think of, and so I thank you for that. That's really, really great. I do appreciate it. YouTube. No. Terrible news for them. Okay. Well, if it's terrible news, and here's the thing, everybody says, well, is it good in the market? Is it bad in the market? It doesn't matter, because it's all directional. There's only one. There's not a good trade. There's not a good trade. There's not a bad trade. There's just a right trade. And if the market is going to punish Boeing, which it may, and I just want to look at it, then if you're owning some puts, you might do well. You might do well, because people want to buy those puts from you, because they had stock at a lot higher level, thinking it was going to go higher and it's going to go lower, so they want to be able to to do that. So that's a way to go. Just make sure that when you buy them, you have a little bit of left on you don't buy them so close in. Here's the thing about when you're buying puts and you're buying calls. When you're selling them, I like to sell the ones that have very, very short expirations, 4 weeks or less, because I get a lot of theta decay. Now, when I'm buying them, though, I want them out at least 4 weeks, maybe more. So that's kind of what I think of. Oh, okay. Now we have a question here on Occidental Petroleum. You would think that would be a good deal. I don't think you want to be an Oxy, because Oxy made a huge mistake, and that was they went to Warren Buffett, and this was when they were trying to buy this company called Anadarko, which is and they are definitely up today. Okay, it's trading up. Okay, I don't know. I don't know about this one. I think there's a lot of danger with Occidental, and the reason I think there's a lot of danger with Occidental is because Occidental has a lot of debt, and a lot of the debt is very expensive. It's like credit card debt. They went to Warren Buffett and they borrowed like several $1 billion at 13.5%. Wow! Just think about that. Just think about that debt service. When the price of oil is lower than $20, No, I don't think it's where you want to be. This is a short candidate. Now you might want to you might want to possibly use options on this, but I would not buy the underlying stock. That's just my take on it. So we have another question. Thank you very much. What do you think of on options on Oxy? Now that's a little bit different. On options on Oxy, here's the thing with the options. I think that you might want to look at selling calls on this. There is a call, and I would sell this for relatively short. So there's a 29-cent call for May 1st, 15.50 strike price. So you might be able to make some money there. Typically, though, you want to sell the calls a little bit longer than that, so you can get something. I would look to possibly selling the call here. I would look into selling the call. That might be a way to play Oxy. I don't think it's going to be good for Oxy. So if I was looking to make money in this, I would be looking to sell the call. Thank you very much for that comment. That was great. I appreciate it so much. All right, everyone. Well, I have wasted your time here, and I hope. Prices just more okay. Okay. All right. Well, everybody, so appreciate Amazon. Yeah, Amazon earnings. Okay. On Amazon earnings, I think Amazon earnings are going to be very, very good. I just think they are, and I think that's going to carry. That's going to carry the Qs higher. That's just my take on it. But we'll see. We'll see what happens. Amazon is due, by the way, and I just want to give you the kind of the earnings rundown. Amazon is due on the 30th, which is on Thursday after the bell, and I do believe that it is going to probably exceed its numbers. It's probably going to exceed its numbers. Well, anyways, I gotta go, and there's somebody calling me actually. Wow. Okay, and I'll see you tomorrow, same time, 11 o'clock. Thanks now. And everybody on Facebook and no, not Facebook because I messed up on that. Everybody on YouTube and on YouTube and Periscope. Thank you very much for taking a look at me today. So appreciated. What I'd like to try to bring to you every day is some trading ideas, market direction, and kind of ideas that you can maybe make some money in this market. Because here's the thing about the markets. There's never a good market or a bad market. There's just a right market. And there's always ways to make money in the market. And I think that, I'd like to explore some ideas that maybe can help you make more money than you're making currently in the market, and things that have helped me in the past. So I so appreciate you tuning in today, and I hope that you'll tell your friends about it and like me and all that other good stuff and ring the bell. And I've got to get those graphics, which I don't have, but I will. And thanks, and everyone be safe. We're going to come out of this coronavirus thing. It looks like we're going to be reopened here in Texas on Friday, so that's going to change a lot of the things, and I think everyone's going to like that a whole lot more. So I love talking with you guys, and see you tomorrow. And again, it's just so you can sign up for our little letter. I just want to put that up on the screen here, just so you'll have it. And that is, let's see. And that's Dallas Trading Floor. And you can see it on the bottom of the plan. It's Dallas Trading Floor, www.dallastradingfloor.com to sign up. And again, thank you again for your time, and I hope to see you soon tomorrow.